growth. So we're completely focused on the growth market. And this is very much a reflection of what is happening currently in the EIS rules. As you all doubtless know, there have been major changes. Capital preservation, asset-backed type offers are unlikely to be allowed going forward. So growth is the new big space for the EIS. I must stress we're going to be talking about the EIS, not the SEIS. It's a little confusing. Stephen's business is called Startup Funding Club, and this is your first foray into the EIS, I think I'm right in saying. Yeah. So it's really follow-on funding, if you like, so funding for businesses that Stephen and his team have already seeded, but also businesses that have been seeded by other people, so it's going to be a cross-section. Anyway, it is EIS qualifying, and a lot of people have responded to my emails about SFC saying they don't want SEIS, and I had to go back to them and explain that this was EIS. So people are speed reading at the moment and not fully understanding what it is we're talking about. Okay, so I'm going to assume now that everybody who is joining us has joined us. So good afternoon. Welcome to our brief webinar this afternoon on the Startup Funding Club EIS Growth Fund. I'm here with Stephen Page, who is the founder of Startup Funding Club. And we're going to go through some of the key points, but we're going to be focusing very much on growth and on track record and on the types of investment that the fund will be investing in. Okay, I've got a risk warning there, which I'm sure you all understand, which I have to draw your attention to. This is an opening slide, if you like, just to explain that the purpose of the fund is to capitalize on early stage investment by investing in growth companies, so companies that have already moved away from the startup phase and are in the high growth phase. So we're looking at follow-on investing. I'm going to hand over to Stephen so he can talk about his team in a moment. There's a rather boring couple of slides all about enterprise, and I think a lot of you know us. Just to say that we stay with the money all through the process. So that's part of our philosophy. We can go back on that in a moment if you would like. And that's what we all look like. So we're a team of about 8 now. I should have said at the beginning, I forgot actually to mention this. Please type us your questions as we go through the presentation. We will have at least a 5 to 10 minute session at the end where we can address your questions. You need to type them into the chat box on your screen. I should have said that at the beginning, so apologies for that. Now, moving on. Stephen, tell us about Startup Funding Club.
Yeah, okay. Startup Funding Club came out of, I suppose, really out of my background as an entrepreneur for 30 years in the software industry. And I had a number of businesses, a couple of exits. And about 7 years ago, started to, as a lot of entrepreneurs do, started to invest in other people's companies like eMove and UPAD and 1 or 2 companies you may have heard of. And then I thought this makes probably quite, we should really formalize this and put it together into a new company. So 5.5 years ago, we started the Startup Funding Club with a very clear goal, which was to be, initially anyway, to be very early stage investors to seed a lot of companies that are coming through that are very exciting in the UK. And at the time, the SEIS scheme had just been launched. So for the first few years, we focused our activities around SEIS. And we've had a series of funds. And over this period of time, we've built those funds, and we've also built an angel network.
Tell us about your team.
The team, well, we have Angelica, who joined me 4 years ago. She is looking after the everything that goes on operationally. Joseph, who was has probably been with me 4 years as well. and he really came out of a banking background. And by the way, all of the full-time staff except me in Startup Funding Club are 30 or slightly younger. So they're very tuned into what's going on in the startup scene. And the other two people on here, Rick and Mark, are not full-time people, but they are great advocates and partners for us. Rick runs an accounting firm called Bennett Brooks, which is a 100-man accounting firm, and along with him we set up a joint venture to provide low-cost accounting services to startups. And Mark is a long-time friend, and he's run a number of businesses himself, and he's helped me with the strategy for Startup Funding Club over the years. We have a lot of advisors, a lot of experts, a lot of people from our ecosystem. So, for example, we run monthly events where we have 50 to 100 people at those events offering their help and advice on different startups that we'll put in front of them. So last night we had an event, for example, at the Ivy, and we had 5 very interesting companies, all of whom are potentially candidates for this great new fund that we're launching.
Let's move on, shall we? So this is just, sorry, wrong slide. This is just a housekeeping slide. So this is just to run over the key points. We're looking for up to £10 million. We're seeking to raise that as soon as possible. Obviously, we're not going to raise it by the 5th of April, but we hope to raise it during the course of 2018. The minimum investment size is 25,000. Our target return is 2.5 times cash, and our first closing is 4th of April. There'll be subsequent closings throughout the year. So that's just a quick bit of housekeeping. So let's move on. What did I want to do? Sorry,
a little bit about our awards, awards, which I think hopefully will show it's really testament to the work of the team that we've won 3 awards in pretty rapid space of time. The UK Business Angels Association, which is the body that looks after in the UK all the angels and angel networks and VCs, they voted us the lead angel syndicate in July 2016. Then in November last year, the Growth Investor Awards, which is much more from a financial expert's viewpoint, voted for us to be the best angel syndicate as well. And then a couple of weeks ago, the EIS Association, of which Martin was a founder, but of course nothing to do with us getting the award, but we were awarded the 2 weeks ago the Best Rising Star for innovation, actually. So great, I think great credibility for us.
Well done, fantastic. Now, track record. This is, I think, really key, and this is the thing that most people are going to be interested in. You've been involved in over 100 SEIS and EIS investments through your various different funds in the last 6 years.
Yes.
Your deal flow, your annual deal flow is now over 2,000.
Yes.
Which is pretty high, actually.
Yeah. We have a lot of, because we've been very active, we're very well connected to most of the ecosystem, particularly in London, but also in some other cities like Birmingham and Manchester. And for example, which I didn't mention earlier, we're a partner, I should say, of the Mayor's office in London. So tech companies in London that get funding through our network or through our fund, we can get matched funds from the Mayor's office. So we can call on that because we've been made a partner. So
several of your investments are already showing strong signs of growth. So let's focus on those. Talk to us about on Phaedo and BioEpic.
On Phaedo is a great example of a successful startup. So it came to us 4 years ago when we just actually it was 2013. We got some, we put them on at one of our events. We incubated them actually at the time, so they were in our office, and 3 great lads from Oxford, MBAs, but with a very raw idea at the time, hadn't been perfected in any way, but quite clearly they're a wonderful, talented team. So we managed to raise their first 100,000 through SEIS. on a valuation of 600,000. Last year, last May, I think it was, their valuation was 80 million pounds. So actually, if you sold a bit of your SEIS at the time and you adjusted for the half you got back from the taxman, you made a return of 70 times. So for me, this is a classic example of how you can make money through the great tax schemes in this country, and no capital gains tax.
Fantastic. Well, that's an amazing story. Let's talk about BioEpic for a second.
BioEpic is another great example. We invested in this company. They came to us in 2015. This is a classic of how companies can change and pivot from what they originally are. So when they came to us, it was a powder that you took for just before you went to the gym. And it was something called epicatechin, which is an extract of cocoa. And if you took this just before you went to the gym, you would be able to enhance your performance. Unfortunately, it didn't particularly sell well. It didn't do that well. So over the course of the next year or so, they pivoted their business. They changed it to an app for detecting certain illnesses. And their first illness that they are detecting through their app is diabetes. About 6 months ago, they were seeking finance, and of course, if we'd have had our fund, maybe we would have invested in that company. But they went to Hong Kong looking for finance. They were on the point of probably going to give up if they didn't find something, and serendipitously, they forced their way onto some local TV station, showed what they had, which was this fabulous app that tells you if you've got diabetes, and some rich billionaire who was watching got into contact with him immediately afterwards, and about a month ago made a £30 million investment on a valuation of about 70 million, I think. Another great example, when we invested, the valuation would have been 1 million. So another 70 times return after dilution, probably 40 times return. And a long way to go. Neither of these two companies have exited yet. They've both got fantastic potential to really increase that return as they go forward.
I've never heard that story before. That's a wonderful story.
Yeah, it
really
is,
fantastic. Yeah. Right. Now, the investment criteria. So what, Stephen, what are you looking for in investments that you're making? What are the characteristics that you really are seeking?
Yeah, well, when we, up till now, in terms of when we're looking at a company from an SEIS viewpoint, they're very, very early stage. And so it really is all about the people. Obviously, the idea has to be good. Whatever they've built up to that stage has to make sense. But it's about the people. Do they have what it takes to really move this business forward? Are they determined? Are they going to persevere? Are they going to barge their way through? Both examples I just gave are companies that have great teams in place. So you want a great team. You want a resilient and strong CEO with people with complementary skills around them. So that's number one by a long way, and same with EIS. So as we look at the companies for the EIS fund, which will be further advanced than those at the SEIS level, it is still about people, and I believe it's about people as you continue through that path. We're obviously looking for scalability. So a business needs to have the potential to be worth, let's say, 100 million. If not, then, you know, because of the risks associated, which there are, you know, you have to look for businesses that are potentially worth that sort of money. Are they going to solve some real need that's out there, or is it just, you know, oh, we've got something nice to have? Is there a real purpose for this product or service? Momentum at the EIS level, we will be looking for momentum. They have to have revenue. At the SEIS level, most of the companies were pre-revenue. A lot of those companies now have moved on to revenue, and so those with revenue, probably $250,000 to $500,000 a year plus, are the ones that we'll be looking to invest in from the EIS fund. And obviously they need to have intellectual property. We need to have a clear understanding of what route to exit. Who are they going to sell to ultimately? Because at the end of the day, as investors, it's all about the exit.
So, Stephen, what kind of sectors are you looking at in particular? So, the first 10 investments you make, what is the spread likely to be? Is it going to be knowledge intensive? Is it going to be high tech?
I think it's interesting because I said we had the event last night, and if I just tell you the 5 companies very briefly, what sectors they were in. One is a blockchain-based insurance company. One is a robotics business. One is a Internet of Things products for babies. One is a satellite as a service, where they're building a satellite. They're raising the money to build a satellite that will be then available to professors and researchers. And the 5th one is a fashion app that can determine the most suitable fashion for you using artificial intelligence. So basically, at the moment, the big in things, and I'm sure everyone is aware of this, are artificial intelligence, AI, fintech, blockchain, not necessarily cryptocurrency, but blockchain, where people are using the back end of the crypto world to build very robust applications. Internet of Things, virtual reality. We've got a couple of virtual reality companies that are very exciting. And of course, we will still be looking for fast-moving consumer goods, because we have already invested in probably 10 to 15% of our portfolio in that. But there'll be a lot of software companies and payment companies. Already in the 100+ companies that we've got most of our companies fit into the categories I've just mentioned.
Fantastic. Shall we move on and talk about your ecosystem of support? Because I think this is absolutely crucial. And this is what you've been doing ever since 2012, when you started the Startup Funding Club. You've surrounded yourself with mentors and professionals, and talk to us a little bit about the ecosystem.
All of the companies, whatever they might say, need help. And again, I'm, having had 30 odd years as an entrepreneur, I know the pain and the problems and the difficulties and how to grow a business is a very, very hard thing. So these companies need help. So we put together quite a robust ecosystem, starting with having our own network of experts, and some of those actually are angels as well, so that when they invest or they get involved, they're helping the companies. We have a whole range of joint ventures with lawyers and a whole range of things. As I said earlier, we set up a joint venture accounting firm to provide the lowest cost service in the UK, actually, for startups, significantly lower than other accounting firms, purely for startups. We set up a digital social media company to provide services, again, a tech services company offshore, so that they can call upon that if they need to. So we've always tried to build in a very strong network around the startups to provide them with the services they need, they can't afford, so we try and do it at a very, very low cost basis.
And you take board seats on all your investees?
We take observer seats, so we don't actually, we've got board seats on maybe a dozen out of 100, let's say, but I would say all the rest we have the right to an observer seat. We don't want to take a point. If we had directorships of all these companies, I think we might be in a little bit of difficulty with the FCA or someone, because but I remember the FCA telling me I had too many directorships. So we can't have all these directors. But as an observer,
you have the right to attend board meetings.
The right to attend, and actually, to be honest, I'm very involved in a lot of these companies, trying to help them and guide them as best I can.
So where we work, we share the same building, actually, near King's Cross, and there's a constant stream of people coming in and out of this building, and they're either potential investees or the past investees who are coming in, popping in for advice, for meetings, whatever. So it's a bit of a hub, really, isn't it?
It's a hub, yeah.
There's constant activity all day long, which is it's exciting, and it's very symptomatic of what this business is all about. So that's pretty much towards the end of our presentation. I'd be very happy to take any questions anybody has. If you'd like to type us your questions, my colleague will pass them to us, and we can try to answer them. What we want to give you today, we try to give you, is a flavour of
types of businesses that we're going to be investing in, what Stephen and his team look for, the qualities, and then we think together, our two organizations, we think it's a very good marriage. This is a joint venture, so we have all the kind of fund management expertise, particularly on the EIS side. We've been doing this for a very long time, and so it's a marriage between our two businesses, if you like. And as I said at the beginning, growth is where it's all at the moment because of the change in the EIS rules recently. It's all about growth. Anybody, I think, probably is likely to be advised to spread their investment between as many companies as possible. That's why you need to approach investment in the EIS on a spread portfolio basis. So this is a fund, and we will invest in a minimum of 10 investments at the outset. We hope to have 10 investments ready for the 5th of April, so we can issue the shares to the first investors. That depends on how much money we raise over the next 6 weeks and on how many companies that Stephen and his team come up with. So we will be making further allotments of shares as we go through the year. So probably going to do a next big allotment after April will be in June. So throughout the middle of the year, we'll probably be doing regular share issues with a view to making the final share issue towards the end of 2018. So it's very much a 9 to 12 month investment window, if you like. So during that period, we hope to capture some high quality investments.
I think, you know, our job, Startup Funding Club's job, is to do exactly that, which is to find the best investments for an EIS fund. The great thing is, because we've got 100 SEIS companies, probably 10 of those, if not more, probably 20, are candidates for this EIS fund. And we also have great relationships with other funds, such as the AI Seed Fund, where there are 20 AI companies, such as a FinTech fund that we work with. So there's the deal flow, for me, is not particularly going to be that difficult to find great companies.
Stephen, the questions are starting to come in now. So we've got a question from somebody saying, are we co-investing in this fund? And the answer is yes, we are. So the partners of Startup Funding Club and Enterprise, between us, we're going to be putting in no less than £50,000, could be more. So we will be investing shoulder to shoulder, I think is the expression, with our investors. There's another question here which I'm struggling to read. What is the percentage of companies that you invest in to make it? What are the initial
invested in
charges? Is that?
What is the percentage of companies that you invested in that did not make it?
Ah.
What are the initial and management charges?
So it's two questions. First question.
Okay, the first question. So far through our SEIS funds and the Angel Network, let's say it's 120 companies. I would say that 10% of those have gone bust. And those ones are mainly from investments made in 2013 and 14. Maybe one since, maybe one from 2015. But actually the percentage is pretty low considering the risk of SEIS. And at the end of the day, it's going to be, at the SEIS level, it's going to be 1 or 2 in 10 that are going to be the potential on Phaedos and BioEpics that I mentioned earlier.
Okay, charges. So it's a 2.5% upfront charge. We are also introducing a direct investor levy or charge. We will waive that direct investor levy in the case of loyal past investors with Enterprise or indeed with Startup Funding Club. So it's an additional 1.5% if it's somebody we don't know who's not invested with us before. But if you're coming through an advisor, if you are an advisor and you're recommending your clients into this, it's 2.5% initial. Advisor charging is outside of that. We do facilitate it, but it's either on top or taken out of your client's investment. Are there any more questions here? Now, the documentation is available on our website, or of course we can send it to you. So we've got a full information memorandum, which is available on the enterprise website. You just click on current issues, current offers, and it's really very easy. We've also got an executive summary, which is a 2-page summary, which is quite useful for sending on to clients as a summary of the investment to get their interest and support. And then we've also got this key points presentation, which we're using this afternoon with you, and which we will use for future one-on-one meetings. So we've got quite a lot of interest already. Following our initial launch emails, we've got a number of appointments set up with key wealth managers in central London. We're happy to do meetings with people who are outside of London, either over the phone or from time to time we can do them face to face, either here in London or we might come to you. So, are there any more questions from anybody? What I put there is, on the final slide, is the contact details for being in touch with us. For those of you about to leave us, thank you very much for joining us this afternoon. I hope you found it interesting, talking about growth businesses and the scale-up market effectively. And I'm happy to take more questions. We can sit here for another few minutes answering your questions. If you have any, please let us know. Anything else to add, Stephen?
No, but it's obviously very exciting for us. It's the culmination, really, because we've been running SEIS funds for these 5 years now, 4 years plus, and we've got such a good portfolio of companies that it's logical that we have an EIS fund that we can put them to, rather than sending them out to other venture capital firms or to go their merry way to seek money, which is not easy to find. So
sometimes there are companies that think they qualify for the SEIS, but for technical reasons they don't, usually because they're trading longer than 2 years. That's the usual reason, and so they realize that they can't take advantage of the SEIS, but they can, of course, take advantage of the EIS. So in that situation, they will be fast-tracked into this fund if they're appropriate investees. Yeah, so that's quite an important point.
We have 2,000, as Martin said, and it's in all the time actually, applications onto our website each year, and we see approximately 10 a week, so it's 500, and then we sift down from there over a whole process that we go through. And a lot of those now are EIS only, not SEIS. So this gives us a vehicle now to be able to invest EIS money in some very exciting businesses, actually.
So, any more questions? You're still welcome to send them through to us. We will try and answer them. We will remain open for another 2 or 3 minutes. Anything else to add? I think we covered all the points, didn't we?
I think so. Yeah, I hope so. Please ask. If not, I'm sure there's things we may have not covered.
Yeah.
But,
it's a bit like being a newscaster on breakfast show, isn't it?
Yeah, because we can't see you, so we don't know. We don't know if you're there.
We just assume you are.
Interact with you, but
let's turn this off.
Okay. Oh dear. All right, good.
It's good.
Yeah,
we can do more of that. And
yeah, I'm happy to do it.
So
very good.
that's recorded, you see, so people can revisit it on the website.